I really enjoy talking about this subject because even some of the most successful business owners in the UK right now are still not that tax efficient. And again, I'm not a tax advisor or accountant, so we're only sharing today our journey and what we do. And of course, you do need to go and get your own tax advice. The most important thing, DRE, is to have a really good tax advisor, accountant, and also to have the right type of structures. Now, the reality is this: the government are never going to be on our side. And the one thing I can guarantee everyone is that the government are going to keep squeezing and squeezing and squeezing. And the current government, it looks like they just want to destroy the UK. And what we thought they were going to do, they have completely done a U-turn, and they are doing the opposite.
Exactly.
All taxes are going up. They're hitting farmers. They're hitting inheritance tax, corporation tax,
Small
income
businesses.
tax, small businesses, national insurance. You name it, they are doing it. Now, there's two types of people. You're going to get the first type, which are going to bitch and moan and complain and poor me and glass half empty, and they're not going to figure this stuff out, and they're going to blame, and they feel as if they are owed something. Nobody owes you anything.
No.
You make it in this world by being more educated, by having the right people. And if you're listening to this now and you're not in the best financial position, you're probably paying tax that you don't need to pay, you're not making the money that you need to make, then you need to make the decision to change it and stop bitching and stop moaning. We can't change what the government are going to do. So what can you change? You can change your structures, you can change your business. And one of the only ways, DRE, in the UK to become more tax efficient is by becoming a business owner. So even if you're on 6 or 7 figures a year, even if you're in the top professional right now, every single person, in my view, should have, and let's just call that a limited company, because when you have a limited company, and even if you're just doing a side hustle, you're turning your passion into profit. You want to get into property. You want to launch a consulting business. By having a limited company, which anyone can set up, by having a limited company, you can then run legitimate tax reduction expenses through your business, and for sure we can go through some of those, right?
No, thank you for that. This whole taxation, like you said, is really around us. I mean, only yesterday I was in my car listening to radio, and I thought, gosh, what else do people do here who don't have the knowledge we have? And there's one thing you mentioned in the beginning, and that is, you said seek advice from an accountant or a tax advisor. A lot of people think every accountant is a tax advisor, and that's wrong. And a lot of people think that whatever the accountant says, that goes. And I firsthand know that's absolutely wrong, because a tax advisor is completely different. Some accountants can be tax advisors as well. That's great, but generally speaking, the two are not the same. So be careful. An accountant can just count things for you and do your books and all that and get you ready, but an efficient tax advisor is a completely different story. Could you tell me?
100%. You've got to make sure you've got the right team, and not all accountants are equal and not all tax advisors are equal. Exactly. So if you feel like you're not getting the service, and you've got to challenge, we want to sweat the assets. I want to pay tax, but I want to pay the right amount of tax, and I want to make sure that I'm using every possible legal loophole to basically have the right type of structure. And I mentioned one of those is by having a limited company. Once you've got a limited company, you can then attach a pension type trust to it, which is known as a SSAS, a small self-administered scheme. A SSAS, in my view, is the best type of pension for business owners. You need to be a business owner to have a SSAS, and the IFAs and the banks and HMRC don't really want you to know about this because it is really, really tax efficient. An IFA will tell you to do a SIP because they get commissions on SIPs and that type of stuff, where with a SSAS, you are your trustee and you have a board of trustees, but you are one of the trustees and you are in full control of what you can invest your money into. And if you have a profitable company, you can then pay up to your SSAS £60,000 per year as an employer contribution, no corporation tax. And if you are declaring £60,000, well, it's 25%, right?
Yeah.
It's 25% corporation tax, but you can move that money up to your SSAS and pay zero corporation tax. What you can then do, DRE, this is really interesting. So let's just take £110,000 salary. You know, if you're taking that as PAYE, high taxpayer, national insurance, money going into some pension that's probably not going to do you any good. Let's just say you lose 50% of that money. So on 110,000, that is £55,000 gone. And then the £55,000 left, everything you spend money on is not a tax deductible expense, and you're being taxed on the tax, on the tax, on the tax. Everything is a tax. However, having a SSAS, taking out your salary before tax, 12,750, I believe, then taking out dividends up to 37,500, you only pay around £3,255 tax on 110 grand. So if there was you and your wife doing that in your structure, that's 210 grand. If there's you, your wife and your 2 kids potentially, and there's 4 of you in the family, you could be paying yourself £440,000 as a family and only pay around £15,000 in tax. So, you know, these are some of the things that you can be doing with the right business, with the right structure. And look, you know, they're saying a million people a month are leaving the UK, millionaires, and going to places like Dubai. And I get it. But my business is in the UK. Yeah. My family's in the UK. Yes, I want to travel more. And sometimes looking at these other loopholes outside the UK, well, what happens if they close the door on those? And then when you look at the people involved and the flights, and then the journey, and then the relocation, and then all the fees involved in setting up some of these luxury structures, let's say, creative structures, that has an upside, it has a downside. And I'm not saying that's not a good thing for some people, but actually, why don't you just make more money in the UK? Have a great business, get smarter, become a top 1%, become more efficient. Don't just focus in on saving, making the money. Focus in also on saving the money and then deploying that into investments and tax efficient structures.
This is a very, very urgent announcement. Assets for Life is celebrating its 10 years on the 13th and 14th of September, and I am running a 2-day in-person live event where you can come and spend time with me, multi-millionaire Liam Ryan, and the other incredible speakers and mentors, and come and network with like-minded people. Over the 2 days, I'm literally going to show you how to make, manage and multiply money, how to create a 7-7-7 plan, 7 income streams within 7 years, generating your 7 figures a year profit tax efficiently. This is your time to create wealth. The game is changing. The old way doesn't work anymore, and I am going to show you the new way so you can get up and running. You're also going to get to network and mastermind with the most successful graduates and community members within the Assets for Life family. So what do you need to do? There's a button or a link around this video. If you're listening to this on the podcast, go to the description, click the link and get registered. It's the 13th and 14th of September. We've got a fantastic venue. Come and hang out. This is literally once in a lifetime opportunity. Click that link now, get yourself registered, and this is my personal invitation to you, and I'll see you at the Birthday Weekender.
No, that's great. Thank you. I mean, I know firsthand a case study whereby, you know, people use those luxury, you know, vehicles to take money outside the UK, in one form or another. And then obviously Inland Revenue found out about it, and they kind of came back, and all the penalties and everything, it was just horrendous. I mean, 100,000 saving on tax turned into 500,000 worth of penalties and things, and the paying back the taxman was actually from the net. Wasn't even tax deductible anymore, because you've already done the crime and you shouldn't be. I mean, so it's crazy. So let's say somebody just started a limited business. They're excited about whatever they do, and now they say, okay, I want to be tax efficient. SSAS and other this and that. Who do they contact? What do they do? I suppose, how's the best way to find these right people in the team?
Well, through referrals.
Right.
Through referrals, and by being in a mastermind group, speaking to other successful people. Everything comes down to having conversations and building relationships, and go and do your research and go and see a few tax advisors or accountants and sit down and spend some time on it. Don't look for cheap either. No. You don't have to be the most expensive, but don't look for cheap, because we're talking about your future, and you pay for what you get. But what you can do once you set up your new limited company, that company might need investment. And you might get a loan for that investment. You might raise money via a credit card for that investment. You might do a director loan into the business, which is then paid back to you, and you can charge interest on that director loan. And what you then want to do in your new limited company is you want to be running as many legitimate expenses through that business as possible, which will create a loss. And as it's creating a loss, then that's going to ultimately reduce the profits, which means there's less corporation tax. And if you put in a director loan, you can pay yourself back that before you start paying any tax. And I sat with my accountant recently, and there's 16 areas. Wow. 16 different areas that they may not be suitable for every type of limited company, because some limited companies are allowed different expenses to others. But for example, I do a lot of travel. I'm a property investor. I am an influencer, and I talk around the world. So if I'm looking at property in Dubai, or I'm going to Marbella, or I'm building a villa right now in a corporate structure, that is all tax deductible expenses. I'm not buying those flights in my personal name. It's being bought via the company money. So travel, for example, artificial intelligence, paper for the printer, pens, mobile phones, computers, laptops. Depending on your business, you may be able to get some clothing through your business. I have stage clothes, which I wear on stage, which is a tax deductible expense. So there's lots of things, entertainment, food, that you can be putting through your limited company legitimately to reduce its profits. Sure. And that way, I only take out of the business what I really need to live on, which would be non-company expenses, and to make sure there's enough money being pulled out so I can maximize ISA allowance for me and my kids, and there's some money there, rainy day money, to do the odd emergency from here, there, and everywhere else. But that's really what people need to focus in on.
That's great. That's great advice, and I can relate to some of these. Obviously, like I said, as a veteran business owner, and I've done all the mistakes in the book. So obviously we do all these, what we do, there's a personal satisfaction in running a business and all that rest of it. But ultimately we are doing it for our families, for legacy. And I know you're a family man, you're a loving husband and an amazing father, amazing kids, by the way, I love them. And from a tax point of view, how can we secure their future? I know you alluded to a few things. How can we be smart with tax now so our kids later on don't have to struggle?
I think one of the most important things, again, is to have, if you're in the UK, you've got to have the right type of setup. one of those could be a limited company. Me and my wife, we also have an LLP together, limited liability partnership, and we're able to, that's where a lot of my IP is run, and we have a consulting business, and I am outsourced as a consultant, as a high ticket closer out to some of my other businesses, but we use the LLP legitimately to run our cars through the LLP, so that's a tax deductible expense. My wife is a trustee on my SSAS. My children may go on to my SSAS at some point. So then when I die, the SSAS doesn't die, and that's passed down, building that legacy. But I think one of the most important gifts that you can give your children is to, number one, you become a really good business owner, operator, and also an investor. And even if your children go down the career path, and they want to become future dentists, or they want to become doctors and engineers, and we all need people in these fields. If everyone was an entrepreneur, the world would bloody blow up, right? So we need people that want to be in jobs, but what you've got to show them is how they can be tax efficient and how to invest their money, because when you become an investor, this is how you make money while you sleep, and when you invest, you will be able to combat future inflation, cost of living crisis, and any type of tax. See, what a lot of people do, DRE, is they go, right, I want this amount of money in my pension for when I retire. And the problem is they get that amount of money, they pull their 25% out tax free. Anything else they pull out will be subject to tax. But what's happening is that people are outliving their pension.
Yeah.
So their pension is going within a few years, and then they haven't got any money. So would it be good to have some strategies where you can invest your pension money so your pension pot grows to combat any tax and inflation? So have the right structures. Get your family to understand that, and you might have a structure where your children can become shareholders or directors when they turn 18, but they can be a shareholder now. They could be a shareholder and be part of the business in some form where perhaps they can be taking out dividends every single year.